Today is the 7th of March and a continuing update for sterling US dollar and the dollar index. And I just want to focus on the dollar index, which may be shaping up very nicely for what was covered a couple of days ago, with the potential as a wave 1, ABCA, ABCB, then there's 1, 2, 3, 4, and then 5 for C of 2. On a 360-minute chart, on a daily chart, this would look simply as a 1ABC2. It's looking more likely that this is potentially a 1ABC2 because this looks very much like a 3 in isolation if you count all of this, and if this was an ABC, this would need to be a 5-wave structure, and it's looking more at this moment in time to be a 3. That doesn't mean that the market can't continue down and take out this low, that this is indeed an ABC, but as I mentioned, it's looking more to be correctly labelled as a 1ABC2. If we just label that on an oscillator such as RSI, that is looking like a very, very bullish setup with what would be wave 1, A, B, C, 2, with the oscillator settling on a very bullish support of around 40 or above. And if we look at the same or reverse in the euro-dollar currency pair, we would have a decline rather than a rally, and that is also looking very much excuse me, just move this candlestick to one side, well, not candlestick but a trend line, for a potential decline, but you would have a wave 1, A, B, C, 2, and so far this potential C wave has found resistance on the 61.8% of this wave 1. Remember, from a Fibonacci perspective, it's only this impulse wave down to here that is that will be taken into consideration for a Fibonacci retracement of potentially around 50 or 61 or 76.4 as a retracement level. If you're drawing a fib from here to here and trying to identify a retracement level, you are encompassing the B wave low in addition to that decline, which would be incorrect. It's just the impulse, this low from a B wave low extreme, and then the net retracement would be from this decline from here to here. But it's just interesting how this currency pairs from euro dollar and the dollar index, if you look at this as a 1ABC2, is looking very favourable, and a couple of days ago it was mentioned that this could decline to the further downside, which is so far is what's taken place. That doesn't mean the market can't continue down and smash right through the last low that was registered here on the 16th of February. So it's a case of continue to watch and update, but if this breaks down into a 5-wave sequence, which it would need to be for a C wave, you'd have a wave 1, 2, but the third wave is looking very very short. It's shorter certainly than the first, so this could be a 1, 2, 1, 2 or a 1, 2, 3, 4, and then a short 5th wave needing to be shorter than the third. So we'll continue to watch and update, see how this position unfolds, potentially to the upside. But if the market or the dollar index rallies from here and starts to take out this high and starts to then take out the high or the low of what is labelled as wave 1, then it would certainly look very likely we'd be back up to this level around here. So the level here, wave 1 of 5, you'd be breaking above 95 in the dollar index, and that would be, in my opinion, extremely bullish to the upside, that you would then see the high of 103.95 taken out. So we'll continue to watch and see what takes place.